Rental income is taxable, but most of the expenses involved in generating that income are deductible. Understanding which deductions apply to you can meaningfully reduce your tax liability. The most significant landlord deductions include mortgage interest. The interest portion of your mortgage payment on rental property is fully deductible. This is often the largest single deduction landlords have. Depreciation. The IRS allows landlords to depreciate residential rental property over 27.5 years. On a $275,000 building value, excluding land, that's $10,000 of depreciation per year that reduces your taxable rental income without any cash outlay. This is one of the most powerful tax advantages of rental property ownership. Repairs and maintenance. Costs to maintain and repair the property in its current condition are fully deductible in the year they're incurred. New roof, HVAC service, appliance repair. These are current deductions. Property management fees. If you use a property manager, their fees are deductible. Insurance. Landlord insurance premiums are fully deductible. Property taxes. Real estate taxes paid on the rental property are deductible. Professional services. Attorney and accountant fees directly related to the rental activity are deductible. Travel. Trips to the property for management, maintenance, or inspection are deductible at the IRS standard mileage rate. Tenant screening costs. Yes, those background check fees are deductible too. A few cautions. Improvements, as opposed to repairs, must be depreciated over time rather than deducted immediately. And depreciation gets recaptured when you sell. Work with a CPA familiar with rental property. Tenantscreeningbackgroundcheck.com. Deductible, effective, and delivered in 24 hours or less.